An engulfing candle is the market showing you its head. One side just overpowered the other completely. Here is what it is. When one candle completely eats the other one before it. A big green candle swallows the last red candle. Buyers took over. A big red candle swallows the last green candle. Sellers took control. Not a slow shift, but a sudden, aggressive flip. But here's the catch that most beginners miss. Because it is aggressive, it always shows up at terrible places. Against the trend, at random levels that means nothing. Sometimes it shows up just on its own, and this can trap you. So the fix is confluence. There's more than one reason to take the trade. And engulfing coupled with a strong point of interest is very high probability. In the wrong place without any points of interest, you'll get trapped. So let's discuss and dive deeper. Today's lesson here is going to be discussing about how engulfing candles here can actually be used to help you catch trades. Alright? But understanding that engulfing candle here is a simple 2 candlestick pattern. For example, I'm going to draw it out right now. A engulfing candle, there's bullish and bearish engulfing. So if you don't know what engulfing is because you're just a complete beginner here, the first one here is the bearish engulfing. I'm going to draw it out for you so that you can visualize it for yourself, okay? You are going to have a bearish candle followed by a bullish candle. If you're looking for a bearish engulfing candle, the first thing you must have is a bullish candle, okay? It's a 2 candlestick pattern. Candle 1, bullish. Candle 2, bearish. Now, for you to look for price to give you a bearish engulfing candle, what you need is a bearish candle immediately forming after the bullish candle. And it has to close underneath the bullish candle's bottom wick. Close. That means if the candle here form, the candle here is still open, right? Bearish, 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 bearish. Oh, come back, close inside. This is not a bearish engulfing candle because this has not closed underneath the entire bullish candle, including the wicks. All right. So if you have a bearish engulfing candle, you will be spotting a closure underneath it. It can be like this, can be like this, sometimes can be even larger like this, depending on the volume. All right. So if that's the case, then I know that, okay, at this point, what do you want to do? I want to potentially look for sells, right? Because it's one of the confirmations here that we always use if you're looking for a more aggressive sell. All right. Now, for the flip side, if you're looking for a bullish engulfing candle at the buy zone, for example, you're looking for a bearish candle first, like this, bearish candle, wick. Okay, let's make it smaller, easier to illustrate. And then a bullish candle like this, closing above the entire bearish candle, including the top wick. All right, I know some of you may have the question, do you care about the other end of the wicks? I don't. Do I care about the bearish candle here needing to have a top wick larger than the bullish candle? I don't. All right, I don't care. Why? Because all I'm looking for is bearish volume for a bearish engulfing or bullish volume for a bullish engulfing. As long as the market here closes above or below your previous candle, in this case, you have your engulfing candles. Super simple. Is that clear? Yes or no? Should be quite clear. This is the simplest form of confirmation here. Now, understanding this, how do you know if an engulfing candle here is going to be right for you to look for a trade? Now, understanding that is also the most aggressive. You only have 2 bearish or 2 candles here to tell you that the market here wants to go higher or lower. Okay, why is it the most aggressive? Because for example, the market here can be bearish, right? For example, you create lower highs, lower lows, lower highs, and lower lows. Market here, if it wants to push up, right, and give you a bullish engulfing candle like this, bullish candle like this, and then a bearish candle. All right, before that, let me show it out so that you all can visualize for yourself, really understand it. Yeah, okay, bearish candle and bullish candle, bullish engulfing. Price can still respect this lower high and continue dumping, right? Because you're still in bearish structure. This can form in a bearish fair value gap, and if it does, and it respects, then you kind of fucked, right? Because the market here will then look to continue lower. You don't have a very high probability entry. So then how do you make sure that your engulfing here is actually higher probability for you? Okay, so this is where I want to go through examples. Okay, so let's talk about our zones here today. Currently, the market here has given us my sell zone, sorry, my buy zone from the previous daily low and my 50-minute fair value gap, right? A key point of interest that I marked out here during the London session. Now, when you see this area here as an area for me to look for buys, you know my style. I love to drop down to the lower time frame. For example, the 1, 3, or the 5-minute time frame to look for confirmations. Now, how do you know that the market here, when it gives you an engulfing, is going to be strong or not? If I see price actually here, give me this. Take note this. Lower highs, straight down lower, and then push up, come down. No engulfing, push up, come down. And each and every single time, do you see wicks at this point? No strong closures underneath. Is that a sign that the market here is looking to slow down. Structure-wise, you know it. Whenever you break lower in a downtrend and you see a wick candle close, you're expecting a deeper pullback, right? Yes. So when you see a pattern like this, you see the market here slowing down, and then it gives you an engulfing. Is that where buys would make sense? Because you are expecting price to continue higher. Don't get me wrong, it is still aggressive, right? It's still definitely aggressive. But you have these patterns right here showing you that the wicks that are created right here on the way down is consistent. One time, two time, you keep creating wicks. So when you see an engulfing, okay, you now know, okay, buyers are trying to step in, because that's the whole purpose of the engulfing candle, to let you know that buyers are really trying to push up higher. And bang, you got that, right? If let's say price created the engulfing candle here, for example, it created a bearish candle, a smaller bearish candle, and then a bullish engulfing candle. Imagine this candle here was a bearish candle, and this one here was a bullish candle. Do I want to take the buys? Do you think yes or no? No. Why? Because you don't know whether price is actually slowing down or not. You don't have wicks to show you that the market here is going to slow down in the sells. And in fact, if you have a bearish candle here and then a bullish engulfing here, guess what? Your bullish engulfing comes into a bearish fair value gap. Once again, a red flag, because your fair value gap most times is stronger than an engulfing. I repeat, understanding the context of where your engulfing form is important. The most important is this: in the zone that you're looking for, a buy or a sell. Right? So my buy zone here, you know it. It's a 92.8% win rate setup. I need to use confirmations. Look for confirmations. Here, no engulfing, no problem. I can just chillax and wait. Price comes down, breaks past a low wick, comes down, breaks past a low wick. Engulfing, if I'm looking for an aggressive move, you are willing to take the trade, go for it. Take the trade. Give a bit of breathing room, right? Maybe 50 pips. Below the low at least. Then hold the trade lah. Oh, a bit of drawdown. Okay, no problem. Haven't tapped me out. No problem. Okay, go. Set yourself the break even, risk free. Okay? Because you see price slowing down, you know that this is where the market here is showing you signs of buyers stepping in, sellers losing momentum. Now, how do you execute off the engulfing? Very common question here. If you see an engulfing, you are executing on the candle close. So the moment you see the timer of your countdown, 3, 2, 1, candle close. New candle opens. You press buy immediately already. That's how an engulfing candle is executed. You instantly execute the moment the candle closes as an engulfing. Maybe 1 second after. But that's how you execute off an engulfing. Once again, very aggressive confirmation, but this is how you can use it to your advantage. By making sure that you have additional context behind it. Not just you see one engulfing, you press buy. You see one engulfing, you press sell. No. The reason why an engulfing would work here is because you have signs that the market is slowing down. Okay? Now, there's another scenario in which an engulfing here would work very well. How many of you guys here have seen this before? Market here gives you bearish price action, right? And in the process, it gives you a bearish fair value gap. And as price comes down, right, it creates this official bearish fair value gap. You got a bearish candle right here. I'm gonna make it as realistic as possible, okay? You got a bearish candle right here, like this, and then a bullish candle like this. You completely fail the fair value gap. How many of you guys have seen this before like me? A few times I pointed out live on the street. Now this right here is an extra juicy setup. Why? Because you got two confirmations. You got an engulfing plus an IAVG. This is the best kind of engulfing ever, in my opinion, from what I see. Okay? What you can do is just execute off the engulfing. Some of you may want to wait for price to give you a retest on the IAVG. Sure, do that. You decide for yourself. You test and see which one plays out better for you. Is that clear? Nick, how will you execute if engulfing forms and also an IAVG? Would the engulfing also, would you look for the retest of the IAVG or engulfing? This one, I leave it up to you, chat. I repeat, I leave it up to you. You need to test to see what you're comfortable with. Once again, I'm going through all this content for you for one, so that you know what are the available options. You can test it out, see what you like. See with data. Track. Okay, this is my entry confirmation. This is what I see. I execute based on the confirmation that I mentioned. I see price retest my IAVG after the engulfing. Okay, I execute. How does it go? Nicely. Good. Jot it down. Do it over 10, 20, 30, 40 trades. Now you have a pool of data. Does this make sense, or am I missing out a lot of trades? Should I just execute the engulfing? Alright? Is that clear? G, yeah? Once again. So let me summarize everything right here, chat. I summarize one more time for you. Okay? I'm going to walk you through it one more time. 2 ways to know that your engulfing here is going to be stronger, okay? Not just a random engulfing candle. If price starts to slow down, create wicks, and then you see an engulfing. This is a good example. There's a good chance price is going to go high. Number 2, price creates a failure of a fair value gap with your engulfing. There's a double confirmation. That's how you know that your market here is going to give you a print. Is going to push up higher with a high chance. Once again, caveat here is nothing is 100% win rate, especially since this is a more aggressive setup. Engulfing. Okay? Is that clear? The only time I don't take engulfing buys is if price creates an engulfing like this. An engulfing inside the fair value gap, not respecting it. Still respecting the fair value gap. I don't take the buys. I hate that. I really hate it. Okay? Not because it won't go higher, but because it is 50-50. Does that make sense? I would like to know that I have a high chance of winning when I execute. Yes. So that's the thought process you need to go through your head whenever you're looking for an engulfing. Okay? So once again, this is something here that you guys here can use to print yourself extra profits, especially when using engulfing. Alright? I know it is a very simple concept, just a 2 candlestick pattern, but there are ways to increase the chance of you printing using an engulfing. And these are the 2 ways: by closing above the fair value gap with the engulfing itself on the 1, 3 or the 5 minute time frame, or looking for price to slow down and create wicks so that when you do form your engulfing candle in that direction that you want, you have a higher chance of printing that move with volume. Alright, so go and back test this, forward test this, because this is what you're going to use to catch extra trades. One of the tools in your arsenal, apart from your change character, your IMVGs. So that's how you use engulfing with other points of interest. The engulfing candle tells you which side took control, but where it happens is deciding where the high probability setup will happen. By itself is just aggression, but at a key level in the direction of the higher time frame, right where price has swept liquidity, now you have multiple reasons for price to give you that push. That is what we call a setup, not a guess. And the truth is, engulfing candles are easy to read, easy to see, but it is the discipline of waiting for it to happen at the right place, your right point of interest, before grabbing the entry and jumping in. You don't need to catch and execute on every engulfing candle that you see. You need just fewer, better entries. And that's the whole game. Quality over quantity. Try it on your charts. Spot higher time frame engulfing candles at higher time frame points of interest. Find your key level, wait for price to come into your point of interest, and then from there, use your engulfing candle to get in. Remember, have patience. Wait for price to come in, then execute. If you enjoyed this, subscribe down below, and I'll see you on the next video.